Hello, this is Dave, and welcome to Equity Story. Just before I start, I'd just like to say this is, as per the disclaimer, general share advice and not personal advice. And Wolfie,
Hmm.
Wolfie, 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 woo. Now, um, commodities still the talk of the town. Wolf, now talk us through commodities because there's a few interesting moves. I don't know if you can see here. Obviously, crude looking very strong overnight. Gold not looking too bad. Coal stocks having a big move up today thanks to New Hope Coal's announcement a little bit earlier. Wheat, all these war stocks, Wolf, that we've been talking about, are still going on with it and still looking pretty good. Um, and I think you're going to talk about a few more of these, Wolf. So far away.
Yeah. So look, obviously the war in Ukraine is definitely fueling all these commodity price rises, and you just cannot see an end at the moment, right? I don't think there's going to be a peace deal anytime soon. In fact, I don't think that's what Putin wants. I think he just wants to completely just take Ukraine for his own. So that's and Ukraine's not gonna back down. So that's gonna probably go on, unfortunately, for some time. It could get dirtier, it could get more uglier, it could see even further spike rises in commodity prices. So I'm still, as bad as it sounds, I'm still bullish on the commodity prices. We've seen S32, BHP, and others starting to bounce again, and you can see why. Because if you look at those commodities, like you just said, Dave, they are looking very, very good. The only thing that not looking great, that's nickel, and we know that the reason why is that LME went into a trading hold after that huge spike, and they're trying to get it back to what it was previously because, of course, there was a short squeeze on it. So it's going to sort of go back to where it was previously, and we're back on again as a pretty strong commodity. So that's normal. That's okay. We're actually very happy with that because that was very, very unnatural to see that spike in there. But really, the commodity of the talk of the town for me, Dave, is aluminium, which I think I saw yesterday an announcement saying, and I've got a little article here yesterday. Australia bans exports of aluminium ores to Russia over obviously that aggression towards Ukraine. So, there's Rusal is a big Russian conglomerate that has got smelters and produces aluminium. What it seems like it's going to be happening is there's going to be a squeeze, and the prices of aluminium are going to probably start to edge up. So for me, the number one play would be here in Australia. If that happens, AWC, where you probably might see a benefit to them from a rising share price. Of course, there's other levers that might be at play here, but overall, the big picture says higher aluminium prices will help alumina, AWC.
Thanks for that, Wolf.
And that's 32, by the way. And that's 32 because they've also got smelters.
Thanks, Wolfie. Thanks for that. And it's interesting, isn't it, that AWC, the chart has promised to do something for a while, and we've actually had it amongst the war stocks as an idea, and it hasn't quite gone on with it. But hopefully, well, there's a good chance now. Obviously, Wolf with aluminium going up, it could go on with it. So I just keep an eye on this. If we get a decent green candle, maybe a little bit of a breakout, maybe that's the time to jump on board, Wolfie.
Yeah, or alternatively, like I said, S32 is the one that is starting to bounce again, and maybe you've got much more flexibility in there because it's not just aluminium. They've got some other great commodities like nickel and copper and everything else, and that's looking really good.
And you're playing all the commodities there, and that is looking good. The way it's come back, it's back over $5, and good chance it could go on with it. So,
Yeah.
and we are trending that one at the moment. So, hopefully, just hold on tight. Um, Wolf, let's just stay on the commodity theme if that's okay at the moment.
Yeah.
Yeah.
So,
We had New Hope Coal, very, very strong announcement today.
mm-hmm.
I think around 330 million in profits.
Mm-hmm.
Um, it looks like it could go on with it. And we're sort of, when we had a look at the story, we don't, it could have been a little bit because of COVID, but there's certainly an issue that they weren't profitable last year. So maybe there's a little bit of, you could argue, a little bit of a question mark on the story. Um, but if you're in that, there's no problem. Just put that stop loss just under $3, right? Say 295, and see if this can go. Because I think Macquarie Group, who are very bullish on coal prices, have a lot higher target prices on this stock. 350. I think it's even could be $5 actually.
Yeah, well, short term, Dave, you ride this. You ride it as hard as you can because there's not many points at the moment on a market where you can make some money. So you've got to focus on the stuff that is trending and it is having the time of its life, like coal. So even though I think personally, I'm looking at it's good as it's going to get, right? I just can't think a better set of circumstances for coal for them to actually do very well. And that's why the numbers reflect today on NHCs, how well they're actually performing. So we could, like you said, we could see another 6 months of this at least, right? So that's why you don't want to sell too early. You want to squeeze out every single penny out of these things. So all you do is just tighten the stop losses and keep on it. If you're not in it, Dave, I think you're suggesting to get on one of these horses and keep riding it.
Yeah, Wolf, and I think it's Whitehaven Coal is maybe the more preferred pick out of the two between NHC and WHC. And again, I just saw Macquarie Group with a target price of $8. They're very, very bullish on coal. But we're not going to have a target price there. We're going to, first of all, we're going to look and see if we can hit 450. And if we can hit 450, then we'll try and lift our stop on it. And we're going to have a stop loss at about $3.73, Wolf. So this is one we want to see if we can get a really good return on. And I think, with stop loss just below that low 3 weeks ago, I think if it broke that low, then maybe there's an issue that with coal prices maybe coming back down and the idea is not going to be working for us. But I think at the moment, Wolf, we've got a pretty good stop loss. And we've got pretty good momentum to hopefully make a little bit of money on our WHC.
Oh, I agree. I think, you see the numbers coming out of NHC and the special dividend in there as well. They're not reporting for another 3 months, which is maybe a good thing, where you can set yourself for that, hopefully that extra bit of rise between now and then.
And Wolf, also not forgetting a hot stock a few weeks ago, CRN, which is having a little bit of a breather. I think I'd be very interested if this one could break above 2 by the end of the week. Have a good little bit of price action. And again, there's no reason why this can't emulate NHC and WHC and still keep going higher over the next sort of few months.
Slightly a little bit different dynamics because this one's predominantly all metallurgical coal versus the thermal coal of NHC and WHC.
Yeah, definitely, but still record prices.
Yeah,
so
for sure, it's slightly different dynamics. So definitely probably going to rise, but you just got to watch two different prices of coal. That's what I'm just trying to say here, right? It's not the same product, so you've got to watch the two different sets of numbers.
And Wolf, that's it. And thank you for reminding. That is also the reason we discussed we prefer WHC. It has both coals, so
that's
it's
exactly right.
Yeah, it's a little bit more diversified. So from that point of view, it's we feel more comfortable with it.
Correct.
Well, so when you look at aluminium, obviously we're very interested in AWC. Now CAA is down. Is this because possibly they are going to be looking at tighter margins with higher prices coming?
Look, it's an interesting dilemma. I've been thinking about this morning about it, and actually last night because I saw that article come out yesterday. So I'm thinking this is a aluminium, not producer, but uses aluminium to derive products, right? So presumably the costs for them, their raw material costs will go up, which is not a great thing. So the question is, are they going to benefit? Are they not going to benefit? If there's a ban towards sell towards Russia, does say like someone like an AWC, will they sell their products to say like a CAA at a reasonable price? This is some of the dynamics you got to think about. And also there's what sort of stash does CAA have? How much aluminium have they stored for the rainy day, potentially? There's a lot of questions in there. But again, this is a story that's got a dividend attached to it. So it's more about not the short term, the long term game with CAA. So as long as it holds that, I think $8, I think, Dave, we're happy.
Yeah, I mean, listen, like you said, it is a dividend play. You can look at it on if you want on a monthly, Wolf.
Yep.
And I think You really, yeah, I think you could say that. 7.23 around there. Maybe if it went below $7.23 on a monthly, there might be something more seriously wrong with the company.
Yeah.
But at the moment, the chart looks pretty good. So,
Yeah,
but I think it's something just to be wary about if you've got it on your obviously on your system. Wolf, BLD came out with an announcement today, getting affected by the rains. Now, obviously the chart's terrible, and I don't think we've got people in that one, but we do have a lot of people in BKW. Is it? And I put it on a monthly chart because that's the way we're looking at this story. Sorry. Talk me through this one, Wolf. So,
let's go back to BLW for the moment. I just want to quickly
back to which one?
BLD, because I just want to set the scene first. And you gotta give it a little bit of excuse it, because they did sell a big part of their business, right? So that's why that's the red candle, right? So we know the reason why there's a big red candle in there. However, since then it's been pretty weak, right? For the first month, post that sale of the business. Are the businesses the same between BLW and BKW? I don't think so. I think BKW for me is a better business overall, and much more diversified business overall. Remember, they've got a cross shareholding with Sols, which they own parts NHC. So overall, I think much more quality in BKW for me. So for me, a long term, because remember, this is just short term. If you look at the BLD announcement today, they're saying that they've got hit by the floods, so there's less selling, which is understandable, of course. But post the floods, surely there's going to be a rebuild of some kind. So there's going to be a demand for bricks. So short-term issues present long-term opportunities a lot of the time for investors like myself. So I still wouldn't be, I wouldn't be that particularly worried about what the announcement came through BLD. Yeah, there could be some maybe weakness from BKW. Maybe they come up with an announcement saying, we had some similar type problems. We see some weakness in demand for our bricks. But like I said, it's much more diversified business. I think if there was any weakness, I'd be looking to accumulate this, but long term. I've got to have that three-year outlook at the very least. Because if you look at the chart over the long period of time, that's how this stock operates, Dave, on a long-term basis, not on a short-term trending basis. You might trend it here and there short-term, but it's more of a long-term type business.
Well, so basically what you're saying, we could see a weaker announcement maybe coming from BKW, and that could bring the price maybe down to $20, maybe a little bit lower, closer to the trend line. But for you, what you're saying, if that happens, it's an opportunity.
Yeah, absolutely. I mean, you always have to look at it as an opportunity, because these floods are short-term. This is a one-off event. Maybe it will be reoccurring every year, but it's a one-off short-term event, and you know that afterward there's going to be a rebuild of some kind. People not just going to live in tents; they have to rebuild their houses and so on. So, yeah, short-term hit, but long-term, I think it'll be much better placed anyway. So for me, I'm not too worried, and actually it will give me probably an opportunity. But we just got to wait to see what the announcement might be, if there's going to be one in the first place, and see where the chart is at the time.
Thanks, Wolfie. Interestingly, SSM. Oh, sorry, I have to get off these monthly charts back to weekly. That doesn't look very good.
I'll be looking at monthly charts while you're away. Get a long term. Is there anything long term out there?
Well, Wolf, look at SSM. They had that nice move up last week. Good announcement today.
Yep.
So hasn't gone on with it. So you just wonder, people in the know having a buying and maybe taking a profit, but it's still looking reasonably good on the chart. And to get a sort of strong announcement. Another chart that's looked good is IXR, which came out with an announcement today. I don't know, Wolf, you 100% success rate for phase 4, tranche 6 infill drill results. I mean, those drill results, 100% success accepted, but 100% pretty average.
Well, I mean, depending how you interpret these things, like, is it just because you touch a bit of rare earths, does it mean success? Is that what it is? That, I mean, that's what it sounds like, right? It doesn't matter if it's the tiniest little speck of it's a success for them. That's how I interpret these results, because they are low grade. I mean, you're not going to mind these things for sure. But if that's how they judge their own success by, there's actually some rare earths in there, whatever that might be, how small that might be in quantities, is successful, then so be it. I mean, that's the problem with, interpretation of results can be construed in various different ways and is very subjective as well, Dave. So for me,
well, hopefully they're thinking if maybe they're thinking if they've got some rare earths, maybe they've got better. They're going to have better hits nearby, hopefully.
Well, this is what you probably have to interpret it as right. That there's a bit of smoke around, but it's just too low grades. I don't think you can mine these at all. So yeah, for me, I would not get excited at all about this yet.
And MRM again looking very good. A little bit of recovery on Einstein's, and sure enough, sold one of their boats to Fortescue, which is quite interesting. Which is quite good. Wolf. You know how much we love the green.
Why is FMG buying boats? What are they going to do?
Well, maybe he's. I don't know. Maybe he's going to turn it into his luxury. No, they're.
Are they mining iron ore in the bottom of the sea?
No, he's trying to do something very, very good, I think. Wolf, he's hang on, I can't get up. If you get the announcement up, he's trying to look to run the boat on totally green.
Oh, okay.
Right.
So he's trying to run the boat aground.
Yeah, don't be mean about Andrew, because he said.
Oh, look, everyone's got their own objectives. So, but look, overall, Dave, I think he's definitely good for Australia for sure. He's interested at heart. Australia.
Yeah, look.
Second to him.
He plans to convert the vessel to dual fuel with the objective of operating almost totally green on green ammonia.
Yeah, there you go. But look, definitely, I like this chart, Dave. It's like we said yesterday. It is in the right space at the right time. It's finally the stars have aligned for good old MRI. Dave, I remember I used to be trading and owning this when I first started my investment venture back in 30 years ago. Right? Wait, okay, no, sorry, I lied. Not 30 years, maybe 15 years ago. So yeah, I had a good ride. But when
I hope you sold it when it broke the trend line.
Yeah, well, this is the other problem, Dave. It's not a very good indicative what you see there. It was never $20. It's just been diluted, and the shares have been consolidated. So it looks better than it is.
Okay.
But anyway, look, I used to have a little soft spot for this because I thought, this is a fairly interesting little company supplying the boats towards the oil and gas industry, and they're expanding internationally, and unfortunately things turned against them. So like I said, you can have a good business, be in the wrong place at the wrong time. You suffer. They did. And now a business that's in the right place at the right time. So maybe this is going to be the turnaround that they needed.
All right, Wolf, that's very honest of you to admit you like that story, which does worry me a little bit.
I was very fresh and very green back then.
Yeah, well, we won't talk about that one. Next stock, move on. Good to be honest. Now, Wolf, the Fed said overnight interest rates look like they're going to be they're worried about inflation. They're going to be pushing up these interest rates up faster and harder, which is not a good news for us over here either, by the way. So, which is a little bit of a worry for the RBA. But let's have a look. This is a worry for people. Suddenly, Wolf, we're in this world where maybe property prices are not going to do much, and we've got inflation happening, and people looking for areas to put their money where they can have a bit of an inflation hedge.
Yeah, and I'll be amazed if the actual real estate prices will go up with the strong rises in interest rates. I think we're definitely in a period for a bit of probably sideways to downward push for the real estate. So that maybe that asset class is going to struggle.
So Baird came out in America last night and came up with sort of a few more, but we're going to go through these 6 stocks, which may be a place to put your money, and they should hold up with inflation, hopefully.
Yes.
And I'd like you to talk us through those stocks and maybe the reasoning there, Wolf. So EA, Electronic Arts, was one of them. And maybe I should put these on monthly charts, really, because they're sort of big American companies as inflation hedges. So the reason they like Electronic Arts is that they might make games like the FIFA, which all the kids buy, Sims, which I think get upgraded every year. So I think they're basically saying the kids are always going to be buying video games, and I think there's a bit of truth in that, isn't there? I mean, it's not like
Yeah, well, I don't think inflation has got anything to do with kids. They're just going to go get the money themselves or from their parents anyway. There is no such. And you probably, Dave, you probably have to agree with that with your kids, right?
yeah, I
There is
do.
no inflation in your world, is there?
Well, listen, I tell you what, when you got the kids screaming at you
I want
and
some money. Okay.
and you just think, oh, why go and play your video game? It keeps them quiet for about an hour. They go like this. It gets your sanity back. Sorry, you shouldn't say that because it's like they shouldn't be in front of the TV too much. But it's sanity for parents. That's what I think video games are. They
Look,
keep.
I have to agree with that sentiment, though, right? Yeah, I agree that's possibly the gaming world is probably not going to be affected that much. So PLY for us, Dave, it could be a really, really nice play because
Well, that's
nice.
yeah. Well, that's the interesting thing, Wolf. I mean, this is a big stock for us, and we're into it. And if they're saying these sort of video game stories can be inflation hedges, well, certainly it's another tick in the box for a little PLY, isn't it?
Yeah, absolutely. And the beauty about PLY, it's actually expanding into the crypto and NFT world, which also I've been reading articles recently saying that this is going to be the next big thing, right? So look, it's almost like hedging its bets, PLY, in every single new space that's coming up. So yeah, you got to like it.
Well, the other one they came up, and again on monthly chart, it actually looks quite good, Amazon,
Yep.
is Amazon, because what they're saying is that, with petrol prices as expensive as they are, people maybe are not going to drive, they're just going to go and buy everything on Amazon. Well, there's a bit of truth in that. I mean,
100%, Dave.
yeah.
Can you think of a better time to actually stay home when you have to pay $22.20 for fuel, and it could be like that for a little bit of time. So what do? You buy, you're trying to maybe avoid the unnecessary travel to a shopping center, for example, and just buy a thing online. So are we going to go back to that COVID times where some of these fintechs, some of these retailers, online retailers, have another bit of a leg up? Absolutely, we could. So I like the fact that you've got no bricks and mortar as well, so you're not going to see inflation from that side. So the only inflation you might see maybe would be from staff, right? Your wages rises, but I'm sure if you are big enough and you've got a product good enough, you can regulate your prices, and people will just pay it whatever they need to.
Yeah, it is a worry, this inflation. It must be a worry for a lot of people, Wolf. Google was the next on their list. I think the fact that they control so much of the online advertising market through Alphabet, and they see this as, possibly growth of around 15% over the next 2 or 3 years. Again, it's Google controls such a big part of the advertising on the internet, doesn't it?
Yeah, this is the thing. If we're saying that you've got e-commerce businesses and retailers are going to do well, then they have to advertise, and they will advertise through Google's, and they're going to advertise through that way. So definitely Google is part of that maybe great inflationary hedge.
Apple, I'm not surprised they're on. I mean, we all love our iPhones. We're all addicted to them. You've got one, Wolf. I've got one. They can control it. They've actually put the prices down recently, so I don't think it's any hard for them to put the prices back up. And
they are really, they've got control of their own destiny, because they dictated the prices. So it's one of those businesses that has got the power to dictate the prices to the consumer. So I think they'll be okay.
Another two, Nvidia and INTC, which are the Intel chip manufacturers. I mean, Nvidia's a lot more than that, Wolf. Nvidia's like a little mini Apple, isn't it? It's got its fingers in electronic cars and video game headsets. It's a lot of stuff. So, and INTC, so Intel Corp, Wolf. So there's some interesting ideas that members of Equity Story might be interested in having a look at in, what could be a very sort of high inflation period, and looking to sort of ideas to hold the value of their money up, Wolf.
Yeah, so definitely, so there's definitely a thing here for me, and that is going look at those great online companies, the electronic companies that have have been maybe hit a little bit, and maybe the second coming is actually coming.
Oh, you're full of wisdom.
Yeah, I am. I'm just full of genius. That's what it is, Dave.
Yeah, I can see that by your purchase of MRM. It did very well, didn't it?
Hey, let's not talk about what happened 15 years ago. Let's talk about what was that, my beautiful pick of MAD for the hot stock. Thank you.
Yeah, I must admit, Wolf did pick Mad, so well done. And listen, that share price action is looking very good, Wolf, and looks like it could go on with it and hopefully have a nice little move. I mean, you can see it. It's going to be volatile, right? The way it's moving. I mean, it's going to have a run up here, back down to 3, but generally speaking, the momentum's on a great little move up, isn't it?
Hey, but if you're a short-term trader, you could easily already be taking profits on this, right? This is the thing. We've put it on, was 280, 270 something, 280. So you've already got 10% in this. In this market, 10% is a pretty good profit. So I wouldn't be surprised if some of our members already be taking profits out of this. And that's great.
Would you be, if you were in this, would you be mad to take a profit, or would you?
Oh, I wouldn't be mad if I was trading it on a short-term basis.
No, long term. Have you got?
I think this is a great story for the future.
So what, you've got a much higher valuation in your?
Oh, look, if they keep growing at the level they have been, which is 20-30% odd, then if I've got a 5-year outlook, for example, on a company that's really well run in the right space at the right time, then I could see this, way north of, say, $5.
Right. In what time frame, Wolf?
Well, like I said, 3 years plus.
That's not a bad return if that happens.
Yeah, I mean, if you can double your money, every 3 or 5 years, you should be very, very happy with returns like that, really.
All right.
Because I'm talking from a long term, and it's very difficult, I suppose, for short term traders thinking, oh, I've got to wait 5 years. But you know what? That's the normality of it. If you can double your money every that sort of often, you're going extremely well.
Well, like I said the other day, Wolf, I was talking to a very, very good fund manager. They don't really look at stocks for less than 10-year time frames,
Exactly. So I'm actually trying to cater to some of these short termers by dropping my 5-year outlook to 3 years.
All right. On that note, Wolfie, thank you very much. Have a wonderful day, and always absolutely brilliant advice, Wolfie. Thank you.
Cheers. Bye.
Bye. Bye.